On this computer. Good afternoon, everyone. My name is Domenic Carosa. I'm the founder and chair of Banxa. With me today, I have Holger Arians, our CEO. Welcome, Holger.
Thank you, Dom. Hello, everyone.
As we announced to the market yesterday, Banxa has obviously made some changes to its business, and we thought it would make a lot of sense to communicate this to shareholders, and sort of we'll take you through the announcement and just give you some extra color. And at the same time, I know, and I've already had a number of investors email me questions. So feel free to, there's a little chat box somewhere on your screen. Feel free to basically send through your Q&A. We will do our best to answer your questions. And but there obviously will be certain questions that we can't answer. For those that are maybe new and haven't heard the Banxa story before, Banxa has been around since 2014. We listed the company in January 2021 on the TSXV and the OTCQX, and we're one of the leading on and off ramps for digital assets, particularly into what we call Web3. And so what we announced yesterday was a plan to reduce our cost base, just given the current market conditions, and ultimately leaving us with a very clear line to profitability. And what I will say is, having been around since 2014, we've been through what is sometimes called crypto winters, and we've survived those. And our view is we're going to survive this one as well, if in fact we are going to crypto winter. But I think in this case, it makes sense to make sense to be conservative. So maybe at this particular point in time, I should pass across to Holger. That will just provide a bit more color around some of the changes in the business, and take us through some of these highlights.
Awesome. Thanks very much, Dom. And again, hello, everyone. Thanks for joining. So as you all know, by now we've announced it to the market. We've reduced the headcount, and where that is coming from really is we've grown very, very quickly, like many other crypto companies, generally e-commerce companies, over the last, let's say, 24 months. And what we've seen is that we've onboarded more people remotely. We have expanded our global footprint, mostly in Europe. We've added many people to our office in Lithuania, had a few remote workers across other European countries. And what we've realized over time was that we didn't get the productivity out of this rapid expansion. I would say we have not fully integrated many team members in a short amount of time, because a lot was remote over different time zones. We had teams in different geographies that have never in person met their counterpart. So the productivity gains were not fully there. And what we've also realized is that we're able to actually work much more productive in an office environment, specifically in a similar time zone. And that led to, together with a number of macroeconomic influences from, we all know what's been happening since the beginning of the year, the global economy, there's a war in Europe, a number of other factors. In addition, we've seen a number of crypto companies collapse, and it's coming more and more to light that here and there was foul play involved as well. It's just never a good look for our industry, because we are still lacking trust in many areas. So it does have an impact. And as you know, our share price has been impacted as well. We feel the pain, and people are generally more cautious. So together with those macro influences, we've made the decision to just get more in control. Also because, as Dom said, we've both been doing this for more than 8 years, 8.5 years now. we've seen many more ups and downs in the space. Much more concerning, if you ask me. There has never been so much validation for what we're doing, for the space we're in. There have never been so many fundamentals right in crypto. Never so many institutions coming aboard, and so on. But things have heated up too quickly, in my view. The last 2 years were extremely good. Everyone was was riding the wave. But eventually, it's just getting too hot. And we've seen that since the beginning of this year, where people have just been more cautious. And what we do, because we've done it before, we've observed that very well. We've looked at different triggers we have. And eventually we said, we have grown too quickly. We believe we can be much more efficient if we, centralize things more. We have also worked in a number of automations across the business, but specifically in the customer onboarding, the KYC verification process. So that has helped a lot. And just general inefficiencies with a much bigger team across different time zones. So we've analyzed this very, very well over the past few weeks, and came to the decision, which personally was extremely hard because we've grown very much as a family, but still it's been inefficient. And as a business, we made the decision to lay off approximately 30% of the team members globally. And just to briefly add to that, because I've seen it in one of the questions, there was across all teams. So we've made not equal cuts, but we have made cuts across all teams. We've also significantly reduced the European operations and have moved a number of functions back to Australia and the Philippines, where we have a back office operation, so that we're in a similar time zone, again, much more centralized. And that is all to strengthen the core, to really focus on what we have already delivered to the market and just building up on that. And for us, the next 6-12 months is all about building, continuing to build out our Horizon 1 product, which are the fiat on and off ramps for Web3. Web3 is just evolving. Now in a crypto winter, there's going to be so much more coming out because people are back building, and they're actually getting their hands dirty and ship products. We want to integrate with these projects early. We also want to continue supporting our existing partners much more and have deeper integrations with them. That's going to be really, really important for us because we do have those relationships. They trust us. We're proven. Our conversion rates are very, very high. So it's a win-win-win situation for us, our partners, and their users, who are eventually converting their fiat currency to cryptocurrency, and off-ramping as well, which means we're adding support for stable coins, Bitcoin, Ethereum, across many different geographies where people can then convert their cryptocurrency back to fiat currency. We push that onto their bank account. So that is very important as well. We continue to build out those payment channels that we have in many markets. We've launched Brazil recently and Turkey as well. We're about to launch the Philippines in a little while. The company is already set up there, and we have a few others in the pipeline. But everything much more focused and much more streamlined through this change. And then you've read something about the US as well. In our announcement, in the US, we're acquiring our own money transmitter licenses in various states over time. We've started the process. We have an office in Reno, Nevada, because that's where you can get a state trust license, and where we can then build out our US operations, where we have control over those licenses. We can offer much more products than we can right now through the settlement partner we're working with. And we're certainly saving a lot of money through this as well. And then the final bit of what we're working on as well is the NFT checkout. Many of you will have heard about how we've launched the direct fiat or cash to NFT checkout recently. We're going to pursue that. We have a lot of interest from Web2 brands. We've done our first pilot with Hendrix Gin, a spirits company, which has launched their own NFT series. And Banxa is facilitating the compliance and payments part in that collaboration. And we are now pursuing further partnerships in this regard and speaking with the big brands and their agencies that are managing them. So that's a very high level from myself. Dom, back to you.
Holger, thank you for that. And maybe just to add a couple of key points. Obviously, there's some headwinds in the marketplace that I think we're all fairly familiar with, both in terms of the equity markets as well as the crypto markets. And so it only made sense that we actually went in and reviewed not only our employee base, but SG&A as well, and expected savings are well in excess of 10 million per annum. So very difficult, but very important cuts in the business, which obviously gives us a much stronger line of sight to profitability. And as Holger mentioned, we're still going to continue doing all the things that we're doing in a much more efficient way. We have in the background been working on a bunch of automation, as Holger said, around customer service. And just to give people out there some context, in December, which was one of our record TTV months, I think it was well over 250 million of TTV. And we had, in terms of the number of transactions, it was like 270,000 transactions. And our team and our technology was able to handle that. And over the last 6 months, we've made even more inroads into further automating that onboarding, AML, KYC, and customer service aspect. And at the same time, it's just really about refocusing the resources, as Holger mentioned, continuing to build out local payments in the US, in Europe, and APAC markets, which is really one of the core differentiators with Banxa and the competition, where we really focus on being compliant and having the appropriate VASP, virtual asset service provider licenses around the world, and then having the largest range of local payment methods. And you may ask, well, why is that important? Local payment methods have a much higher conversion rate, and they're much more cost effective, literally costing pennies, as compared to credit card, which is what most of our competitors offer. And then when you go into markets like Brazil or Turkey or some of the emerging markets, credit card penetration, unlike the US, is very, very low. In Brazil, it's less than 5%. And just on the whole NFT checkout, we announced that early in May. We've had very positive feedback. We were actually at a couple of conferences, including NFT in New York and Consensus in Austin earlier in the last couple of weeks, and we've had very positive feedback from partners and from brands with regards to that. And the way that I really look at this is, this is a measure of responsible management. We've had significant growth that's like taking 3-4 steps forward, taking 1 step back, and I think it's a natural and very important part of any business. There's a couple of questions so Anonymous sends through, asking questions around employing cuts. As Holger said, it was very much across the board. Having said that, I think if you were to look where there was maybe less compared to other areas, is really on the customer facing side, the sales and marketing. That's obviously a very important focus for us. And Anon asks, is management expecting another round of layoffs after the first 30%? The answer is no. That's not our expectation. The view in this, and there's a few different schools of thought, and I'm just going to sort of take a step back just to sort of get, once again, add a bit of color, is whenever one needs to make these changes, because they are hard changes, you go deep, you do it once, and you don't have to do it again. That's sort of, one certain philosophy. But even just putting aside the the cuts that we've made, my view, any organization, and this is, this is not coming from me, this is coming from Jack Welch, ex-GE. What he used to do was, every single year, take all the people, classify, break them down into A's, B's, and C's. What can we do to incentivize our A's and really help them continue growing? How can we break down, the B's, and which B's can become A's, and provide them the mentoring? Which B's will just always be B's and they're fine. And then you take your C's, and work out who's going to end up being a B. And then you take your C's that will only ever be C's, and you cut. And so you then effectively put these people, and I know I'm kind of being a little bit mechanical, just to kind of sort of give you some insight. Every year he would cut between 10 to 15% of his team, effectively the least performing individuals, and then replace it with new blood. So, I think if you kind of look at what we've done at Banxa, we've grown significantly. I think, percentage of the cuts come from, we've grown. The markets have come against us and everyone else in the space. That deserves some cuts, but also at the same time, using a bit of Jack Welch in regards to, always trying to prune the tree, or the spring clean, as some people say. So there are a couple of questions. I had a couple of people email me beforehand, and Tommy asks, can you provide any more insight into the NASDAQ uplisting? I think, Tommy, right now, the focus is on the business. As I mentioned and have mentioned previously, we started the process at the start of the year. We pretty much checked off every single question that NASDAQ had. There were a couple more hurdles, including a pricing hurdle. Right now, we need at least a $2 US share price in order to be able to meet that requirement. We don't, and we're not really in a position, in my view, to undertake some kind of consolidation or a reverse split. And so my view, if you're asking me for timing, I'd say look towards the end of the year, realistically. Andrew asks, can you talk to us about your cash position? As of last reporting period, we had $14 million cash in the bank. We finish off this quarter in a couple of days. We will be announcing our June and our quarterly TTV, total transaction value, over the next week and a half. Think of it sort of sometime after 4th of July holidays or early the week after. And then we'll have our full year results. The auditors are in there. In fact, they've already started the process, and we'll have audited accounts out in the next 90 or so days. Zafar asks, and maybe this is one for you, Holger, will there be a hiring freeze for the near term, or are there any key American geography positions that are outstanding to be filled? Maybe Zafar wants to apply for a job there as well. Go ahead, Holger.
Yeah, no, good question. Yes, there will be a hiring freeze. There already is. And for the American team, we are now full complete. The last roles we really filled, and Dom was pointing to before, was in the sales and marketing team, because I believe we've been flying under the radar quite a bit, not just with the industry, but also certainly the capital markets, of explaining better what we're doing, how we're doing things, how we're different, why we believe we're doing a good job, and have really manifested our position in the digital asset ecosystem. I do believe we've achieved a really good position. We are very well respected by our partners, the big payment providers that we are working with, and we're working with several. So there's a lot of interest about what Banxa is doing. And again, I'm actually quite excited about us now going back to the core and just working on the product. But we will also have much more visibility with telling our narrative to the market and to all stakeholders, and intensifying the sales effort, which have just historically been a little bit behind, because we've worked so much on the product, the payments, and the licenses. And that's what you can actually see, because we have many more than the direct competitors. So Dave, I hope that answers your question.
Thank you. Thanks, Holger. Cyrus asks, there was an article that appeared in Merger Market with regards to consolidation in the market. Are you able to comment? Just to sort of give everyone sort of a bit of context, there was I guess an industry rag, as they sometimes say, called Merger Market, that really looks at consolidation in various industries and those kinds of things. And they looked at the cryptocurrency market, particularly around the sectors that Banxa operates in. They talked about the acquisition of Wire by Bolt for 1.5 billion, which is basically a payment service provider being bought out, buying out a crypto company. They basically, I think in their mention, that Banxa would be an interesting target for, and they listed a bunch of payment service providers, and that's, I think, really interesting industry news and industry analysis. And I guess from a company perspective, we're really not in a position to provide any commentary to that. And if we do have any news on anything like that, we will obviously announce that to market. But other than that, it's no comment. And I think that's basically all from a question perspective. So really, to sum up, we're sort of 22 minutes in. The business is really has experienced some headwinds from an industry perspective that are sort of beyond our control. We're obviously long-term believers in the business, in blockchain and Bitcoin and Ethereum and NFTs and all the other products that go and live on top of the blockchain. These particular cuts that were made, in my view, is really a sign of prudent and responsible management that is open and able to make the tough decisions. And I think that's really important in times like this. And ultimately, what this does is really positions Banxa for growth. And we know the market will come back. Crypto and Bitcoin and the whole ecosystem will come back. That is inevitable, and we're just positioning ourselves for that next big wave. And frankly, I think we will be able to grow even faster, with the technology and the license and payments, and ultimately the great team that we have. So really, without any further to do, I'd like to thank the participants on the call, and for the people that ask questions here and also sent emails through. We do really appreciate this. And once again, if you have any further questions, feel free to reach out to either Holger and I. And looking forward to chatting again. Thank you, everyone. And looking forward to our next webinar, we think, in the next couple of months. Cheers and goodbye.
Thanks, everyone.
Ciao.
Ciao.